Happy week 14, everyone. You guys ready for the exam coming up? Yeah, the enthusiasm is palpable. Yes. As many of you know, I sat in on Dr. Caden's class. I was proctoring her exam on Thursday, and repayment, she's going to actually take over this class today. So, Dr. Caden, we're covering chapters 10 through 16. I'll just go ahead and let you take care of it.
You see the really important stuff. That's what you need to know.
Obviously, joke here. Dr. Caden is coming in to learn more about auditing, so we're going to do our best. Real quick, before we start on the exam review, I wanted to go over something that came up at the end of last class period. A question Hudson asked. I actually realized the answer to the question like about 5 seconds after you left the classroom, but I'm not quite as fast as you are, so I couldn't quite keep up with your pace. So, question is that could we actually have used the cutoff bank statement to test these checks right here? And if so, would the tick marks have been noted here? And the answer is yes. All right, that's something that could have been done, and that's something that you can do when testing outstanding checks. You can actually tie them to the cutoff bank statement. Remember, we also talked about the possibility of examining the canceled checks to make sure that we look at the canceled checks to see that they've cleared. Both of those are viable options. It looks as in this scenario, they actually examine the canceled checks instead of the cutoff bank statement. So either one of the tick marks would be appropriate depending on which scenario was came up. So I wanted to clarify that there was some confusion there, and I mostly on my part, but I wanted to clarify why that was set up that way. All right, we have an exam on Wednesday, so chapters 10 through 16. As always, please show up a little bit early. Make sure you bring something to write with. I don't think there will be many calculations on the exam, but bring a calculator just in case. Bring a pencil and eraser, something to make sure you note with. If you want to bring a pen, that's fine. Just remember that writing in pen, it's hard to erase, especially if you make a mistake, and people change their minds a lot on auditing exams. 12 multiple choice questions, 2 problems. Here's the breakdown of the multiple choice questions. We'll have 1 question on the code of professional conduct. If you remember, that was the chapter that we went over in the last exam review. We will have 2 each from the chapter lectures that we covered. So that's going to be 2 questions from chapter 10, 2 questions from chapter 11, 2 questions from chapter 12, 2 questions from chapter 13, 2 questions from the combined chapter 14 and 15, and 2 questions from chapter 16. Now, while you all are typing, you're probably saying that math doesn't work out, Dr. Mines, that's 13 questions. And I will say it's generally 2 questions. One of those I have taken a question away because I'm going to talk about it later on a problem. So it's generally going to be 2 questions per chapter area that we talked about, but one of those will only have 1 multiple choice question. The problems, I should say, there's 2 problems. One problem is almost identical in format. I should say it is identical in format to the one that's in the practice exam about controls testing. So you need to be able to identify the control, the relevant assertion related to the risk, and the relevant control. That is equally likely to come from revenue, purchasing, or a combination of payroll and inventory. So it would either be revenue, purchasing, or combined inventory and payroll. Now, on the practice exam, I think on the practice exam, I did purchasing as one on the practice exam, and everybody may say, well, we don't have to study purchasing because that's already on the practice exam. You guys are very, very bright to think that, okay? And I will tell you right now, I don't work that way. What I do is I roll a die. It's actually a 6-sided die, and I say 1, 2, certain revenues, 3, 4, purchasing, 5, 6, combination of payroll and inventory. It's going to be one of those 3 combinations, and it's equally likely to be purchasing again. So that's going to be something you might want to keep in mind. The other problem is actually a combination of all parts of the chapters 10 through 16. So it will actually contain components from all parts of those. All right. Any questions on the format of the exam? All right. So as always, I'm going to go through the study guide fairly quickly. I will highlight the points that I think are really important. But if you have questions on a certain area that I don't cover, please raise your hand. Let me know what you think. So let's talk really quickly about some things from the first 2 exams. Remember I told you that there's going to be 2 pages in the study guide that are just devoted from the previous stuff. So the first 2 pages are actually all the stuff that we've covered up to this point. So really important stuff that take away from this. Obviously, everything that's on these pages is viable for the exam, but let me tell you some things that you absolutely should know. In your heart of hearts, you should have this down by now, should have every single aspect of it. All right. First of all, management audit assertions. Those are 100% going to be on the exam, and they will be on the exam in multiple different formats, multiple different ways. You do need to know your assertions. I know we kind of lightened up on those on exam 2, but for this exam, you need to know the management assertions and know them really, really well. When I say no, I'm not just saying, can you list the management assertions? If you can do that, well, good job. All right. But that is not sufficient. Understanding in detail how they apply in every scenario. All right. So that's going to be really important. Also, remember we talked about a lot about in this course about how we determine primary assertions for certain scenarios. Okay. Different accounts. It usually depends on what the account type is. So if I say I want to know the primary assertion for an asset or a revenue account, what is that going to be usually? Yeah, existence occurrence. Okay. If I say liabilities, equity or expenses, what is our generally going to be our primary assertion? Completeness. Because remember, if we're talking about revenues or we're talking about assets, our clients have the tendency to overstate, which is why we're concerned about existence occurrence. Talking about liabilities, equity, or expenses, they have a tendency to understate, which is why we're going to be focused on those. Also, a little bit further down, probably goes without saying that you need to know the types of auditants and audit tests. I know that we went over this in detail back in exam 1. All the stuff we learned in exam 1 related to this, you need to know it. So you not only need to know what the types of tests are, you need to know when we use them and what phases of the audit, and also need to know what assertions they test, which is really, really important. Which I told you guys back in the day, I said, don't forget this stuff because we're going to be dealing with it again. We're back to it again. All right, so here we are. By the way, which one of these tests can never be used as a test of controls? Confirmations. I'm glad we finally got that down. All right, finally got that down. All right. Also, one of the really important aspects of the chapters that we went through a lot is segregation of duties. I'm gonna repeat this multiple times throughout the study guide review, but make sure you really know segregation of duties down. I don't mean know what CAR means. Don't say I know CAR, custody authorization recording. That's great, but we need to understand the scenarios when we use segregation of duties. And there were a lot of examples of those in chapters 10 through 16. So please make sure that you review that. All right, so a whole lot of stuff going on. Let's go ahead and talk about code of professional conduct. There are a few things that I want you to be very focused on with respect to code of professional conduct. First of all, the most important thing we went over the code of professional conduct was the independence rule. It's really, really important with auditors, and it's one thing that we have to be very, very careful about. So we want to know, what is the independence rule and when do we use it? With respect to that, so make sure you understand this stuff right here. And with respect to that, remember we talked about this idea of covered members. There was a big long list of criteria for covered members. Please make sure you are familiar with what a covered member is. Also, make sure you're familiar with who has to follow the rules of covered members. So the covered member basically says that if I'm a covered member in an engagement, I have to be independent from my client with respect to all interests. All right. If I'm an auditor, that's obvious. If I'm a partner that's in the firm, that's obvious. What are some less obvious ones? There are people who are not covered members that have to follow the rules for covered members. So who are some examples of those? Immediately family members with covered members and close relatives, material interest, or significant influence. Those are people who are not covered members, but they still have to follow the rules of covered members. So if I ask you a question on the exam, I won't just specifically say, who's the covered member in this scenario? I'll ask you who have to follow the rules of covered members, which includes all of those. Okay. All of those that are listed up here, which there were 6 items in this slide, and then these items down here, or these individuals down here. That's the most important area that you need to focus on for chapter 10. Question will definitely come from that area. All right, or sorry, the code of professional conduct. Let's talk about chapter 10. Getting ahead of myself. All right. Question came up when we talked about this last time. So do we need to know the revenue recognition stuff? And I'm just going to say yes. Okay. Not because it's likely that I'll test on the exam, but it's just good to know. I'm not saying I won't test on the exam, but this is really important to know. This is accounting recognition of revenue. And plus it's really important for how we actually recognize assertions related to revenue. So make sure you know the 5 steps in revenue recognition. Fraud risk and revenue recognition. Be able to describe each one. We talked about those very, very short briefly, but those are really important with respect to revenue recognition, as these are the most common fraud schemes we see with respect to revenues. The ones that I tend to test on the most are channel stuffing and bill and hold sales. So please make sure you review those. Key segregation of duties. This is going to come up multiple times. So you're going to see me talking about this, but remember, one of the things that we did for chapters 10, 11, 12, and 13 is we identified the functional areas of each of the processes. and we said, which responsibility area does this fall under? And I clarified that there could be multiple responsibility areas in the real world, but from our theoretical perspective, these functional areas usually fall within one area, one responsibility area. And that's how we segregate responsibilities. So make sure you review that and have some clarity on that. That will be the easiest way to approach segregation of duties. And like I've said, segregation duties really important for this upcoming exam. There will be multiple questions on this. So please make sure you're familiar with that. So it's true for revenues, for chapters 10, 11, and this is also true for 12 and 13. You will need to be able to identify which of the duties are being segregated into given control and how that control can prevent possible error or fraud. All right. Then something that you notice that's really important, because I've got a star, I've got it italicized, and I've got it bolded. This is something that we talked about a lot. Remember those 6 tables I said you had to, 6 to 10, 6 tables? Yeah. Those 6 tables that I told you had to review. Make sure you are very familiar with all of those. And that goes back to the control sequence. So just as a reiteration of the control sequence, my diagram that I put together, that was an incredible piece of artwork, this right here, okay? So great that I put it on the image for the Brightspace, the Brightspace image for this course. So we identify the risk that's associated with the management assertion, because that's how we characterize risks as auditors. We characterize them as assertions. Once we understand the risk, we understand what controls can be implemented in response to the risk. And as auditors, we need to understand how do we test those controls. All right. There has to be a logical sequence here. You can't just willy-nilly come up with a control and come up with a test control and say, this is sufficient here. You need to be able to provide me a justification for why a specific control addresses a certain risk and why a certain test is an appropriate test of those controls. And that was the whole purpose of looking at those tables. I'm going to repeat it one last time. Do not memorize the tables. That is folly. You might as well try to memorize the Bible, okay? It would probably actually be an easier task to memorize the Bible. I know people have done that, but yeah. So don't do that. Make sure you understand the content that's in those tables, though. That's really, really critical for this particular exam. All right. Going back to the study guide, the stuff on confirmations. This was our basic review on confirmations. We utilized it in multiple chapters, but this is where it was introduced. Please make sure you review the concepts on confirmations. As a reminder, we ran out of time in our chapter 10 lecture, so I finished in the chapter 11 lecture. So make sure you look at the end of the chapter 10 lecture. And if you're watching the video, check out the beginning of the chapter 11 lecture, because that's where I covered the remaining confirmation material. Okay. Expense categories, know the difference, okay? Because even though we are financial accountants and we like to believe that everything is just period cost and systematic allocation, Dr. Otero would be upset if we didn't remember product costs, okay? So make sure you understand the conceptual difference between these 3 expense categories. As once again, please make sure you're familiar with segregation of duties in this area. We did some more examples of those when we talked about those in class, so please be familiar with those. Also, with respect to controls, make sure you understand how the controls testing sequence works for the different risks and assertions of the purchasing process. So again, there will be a question on this on the exam. It will come again from revenue, purchasing, or a combination of inventory and payroll. I'm going to repeat that again one more time after this. One thing to note, we did homework on the search for unrecorded liabilities. Does everybody remember the homework? Okay. What was the assertion we were testing with the search, by the way? Completeness. We were testing completeness, okay? So please make sure that you know that the assertion is being tested, and make sure you have a general understanding of what it is we did. It was not a complex task. We did basically involve a few important steps, and you need to be able to identify what it is that we were looking at, what we were comparing to, and why it tested completeness in that scenario. Because remember, we're trying to determine if there are any liabilities that did not get recorded, but it appears that they're meeting the obligations for. So make sure you review that. All right, chapter 12. Chapter 12, I'm just going to go ahead and highlight this right here. It says payroll control risks, assertions, possible misstatements, control activities, and example test controls. That was the table on controls that was in chapter 12. Make sure you review that. Inventory, we're going to talk about a little bit more. We got the inventory control risks, which is going to be out here. This is table number 6, by the way. So 2 tables from chapter 10, 2 tables from chapter 11, 1 table in chapter 12, 1 table in chapter 13. That's 6. Yes. Okay. I was holding up 4 fingers. Boy, I'm really struggling with numbers today. It's a good thing I'm an accountant. Yeah. So 6 tables. Make sure you review all of those tables. This is where the 6th table came up. Also, a few things additional that I want to make sure that we're clear on. We talked about how we actually conduct inventory counts. There were several slides on this, and we went through those in detail. I would recommend you review that. So how we actually conduct an inventory count, how the assertions are tested in inventory count, So make sure you understand the auditor's responsibilities with respect to inventory count, and then what they do with respect to testing inventory. An additional item that you might want to look at is that there was a final slide which had a lot of information on it. We spent about 10 minutes talking about it in class. It was the last slide. Well, actually, I should say the second to last slide, because the last slide always said goodbye. But the second to last slide that talked about some special issues related to inventory. Please make sure you look at that, and if necessary, go back and watch the video in that area, because there was a lot of information there, and I gave you a lot more detail that you should have taken notes on. So if you took good notes, great. If you didn't, may want to rewatch that video. Chapter 14. So with respect to chapters 14, 15, and 16, we talked a lot about inherent risk. Inherent risk for prepaid expenses is low, but I do want to talk about this concept with respect to all the things we talked about in chapters 14, 15, and 16. So remember, we talked about inherent risk, and in some scenarios, I said, it depends. All right. So if you want to know what it depends on, go back and look at that. So that was usually the scenarios where we talked about bonds, we talked about equity, we talked about investments. And the answer is, it really depends on the makeup or the composition of what that account entails. If we're talking about standard long-term debt, like just regular, good old bonds, good old negotiable bonds, this is probably not a very high risk. We consider inherent risk as low. But what if we're talking about hybrid securities? Hybrid securities are a lot harder to value. They're a lot harder to maintain. They're a lot harder to determine whether or not there's impairment. So inherent risk goes up if the challenges associated with the instruments go up. So that was basically what the it depends was all about. Yeah. So yeah, make sure you can understand inherent risk with all these items that we talked about in chapters 14, 15, and 16. Property, plant, equipment, usually material and importance. The way that we test is a fixed asset roll forward. Does everybody remember fixed asset roll forward? So remember, fixed asset roll forward, the whole idea is that we did the audit in the previous year. So we know what the beginning balance is. We're trying to validate the ending balance. So instead of testing everything that comprises the ending balance, we say, let's take the beginning balance as a given. Let's just test everything that changed between the beginning and the ending period. So test all transactions related to fixed assets. If we understand those transactions are accurate, if we believe that those transactions are correct, we've got strong validation that our ending balance is correct. So we're basically testing additions and disposals, the items that have changed in the period. Now, I want to make a note of this because this does come up. So I said specifically additions and disposals, which are taken up by these first two items, acquisitions and disposals, but some additional areas that can affect property, plant, and equipment, especially the auditing in that area, are going to be depreciation and leasing, okay? We didn't talk a lot about leasing, but remember from financial accounting, what you learned with Dr. Shoney was that if it's a leased item, it does have to go on the balance sheet. So that would be considered a form of addition of property, plant, and equipment. I won't directly ask you how to audit a lease, but I want you to be able to know that you have to actually include leases in your fixed asset testing. All right, moving to chapter 15. There's that note on inherent risk again. It depends on the complexity of the instrument being audited. Then we generally more efficient to rely on a substantive strategy. So we talked about it in chapter 14, but we reiterated this point in chapter 15 more critically. This is the first time we started talking about a substantive strategy. Every single process we talked about at this point, we said is going to be a reliance strategy. So revenue, purchasing, inventory, payroll, all of those were a reliance strategy for controls testing. Why was that the case? The general reason. So are there a lot of transactions in those areas or very few transactions in those areas? A lot, okay? So it's not really realistic for us to test all of the transactions. Once we start getting down to property, plant, and equipment, we start getting into long-term debt, we get into investments, we get to equity. There are minimal transactions. It's more efficient for us to test the transactions themselves than to test the surrounding controls, which is what we mean by reliance strategy versus substantive strategy. So make sure you understand not just the scenarios that we would use a substantive strategy, those areas, but why it is we would use a substantive strategy in those areas. Real quick, this came up, I think this is on the practice exam, but I want to reiterate this point, okay? Auditing dividends, okay? So there's some information here that talks about when an independent dividend dispersing agent is used and when an independent agent is not used. And you say, do I have to really memorize that at Dr. Barnes? The answer is yes and no, okay? I'm not focused so much on making sure that you memorize what the scenarios are or what the treatment is for each one, but that you understand what are the primary assertions that we're testing in those areas, okay? So if I'm using an independent dividend dispersing, that's really hard to say, independent dividend dispersing agent. Wow, okay. So that's a third party. And if I want to get information from a third party, I'm going to send third party requests, which is a confirmation. All right. What is the primary assertion I'm testing with a confirmation over dividends? Well, it's one of the assertions, but what is the primary assertion? It's completeness. Okay. Completeness would be the test, the assertion be testing here. And then agreement would be our primary test of VAA. That being said, we would test VAA, but it wouldn't be our primary assertion in that area. All right. So we're testing performing tests to test completeness and VAA. Now, if we are not using a dispersing agent, so an independent agent is not used, we recompute the authorized dividend, which is a test of VAA, okay, and tracing to the disbursement payable, which is test of, assuming I use trace correctly, it's a test of completeness, okay, all right. So again, the goal here is not to say specifically what is the language that I use, but do you understand the assertions that are being tested in the scenario? With dividends, we're very, very concerned that anything that's being that was being dispersed is properly recorded, completeness, and they're being recorded at the proper amounts, VAA. So that's what this is referring to here. We'll talk a little bit more about that when we get to the practice exam. Auditing through the income statement. I said most auditing takes place through the balance sheet, and it must be important because I underlined it and italicized it, but I didn't bold it, so it's not that important. Okay, so what do I mean by auditing through the balance sheet? So most of our testing is going to take place on balance sheet accounts. Okay, accounts receivable, accounts payable, long-term debt, equity. Does that mean we don't test the income statement? No, it means that we test the income statement incidentally, because usually if we test the balance sheet, we are testing all transaction activity in the income statement joined with that or associated with that. Also, we can test income statement accounts very effectively using analytical procedures. So be sure that you understand not just that we can how we test income statement accounts, but that we can effectively use analytical procedures in those areas. All right, chapter 16. So remember, we have primary documents needed for testing cash. More specifically, when we test cash, we're testing the bank reconciliation. So we need the bank reconciliation itself. What is it we're trying to prove in the bank reconciliation? What is the number that we're trying to determine is correct? So the book balance or the bank balance? The book balance, okay, we're trying to determine the book balance is correct. How do we do that? We verify the bank balance is accurate and verify all the adjustments that are made from book to bank, okay? So where do we get the information from the bank? It's a standard bank confirmation, okay, standard bank confirmation. And then what is the document that we generally use to test all of the incidental items? It's the cutoff bank statement, okay? There are some scenarios that we're not going to be captured in the cutoff bank statement. If there's something that was recorded on the client side or should have been recorded on the client side but didn't, that would not be on the cutoff bank statement. If there's something that was tested through another method, like the canceled checks that we talked about earlier, that would not be on the cutoff bank statement, or at least it would be, but we wouldn't test it through that. But in general, all of what you need to know here is we need bank reconciliation. That's what we're trying to test, make sure it's correct. We need the bank statement to verify the top line item, and then we need a cutoff bank statement to test all those outstanding checks and the deposits in transit. All right. And then make sure that you take a look at the segregation of duties over the investment function. We had a slide on that. This is one of those areas that with respect to equity and investments, that segregation of duties is still really important. So make sure you have an understanding of what segregation of duties represents in that area. If I do ask a question on that, it's likely to be like a multiple choice question or a small part of a problem, but it's possible that I will ask a question in that area. Additional stuff, I reiterated it once again. Here are our tables again. So make sure that you look at all 6 of these tables, tables 10.6, 10.7, 11.6, 11.7, 12.5, 13.5. I can't reiterate that enough. That's a problem that will comprise 12 points on your exam. So basically, what is that? That's 20% of the exam on that particular problem alone. If you know it really, really well, that's going to give you like a warm, fuzzy blanket, a nice security blanket. If you don't know it, you're going to show up on Wednesday and you're going to feel like you're out in the cold, okay? And we're not going to let you take the test outside, so it's just going to be weird. All right, so make sure you're familiar with all that. Also, make sure you have some understanding of those EWC assignments that we did, the search for unrecorded liabilities and cash, and how those were conducted, okay? The audit for cash, you don't need to focus on the last 3 tabs, which were the extended bank reconciliation procedures, but those first 3 I would have a good understanding of, okay? Any questions on the study guide? Anything that I did not go over that you need clarification on? All is clear as mud. Expecting great things from you guys on Wednesday. All right, go over the exam. So I apologize for the exam. This is the practice exam. It's Terry Ocatho as our auditor. Okay. I promise that Casey Staden will actually be here on Wednesday. Okay. He unfortunately missed it, but if you want to come and see Casey Staden on the exam, you're more than welcome to. All right. So Terry Ocatho works in the Kansas City office at Harrison Jackson Carter. What do you guess? What do you think about that name for an accounting firm? Yeah, they're very reputable firm. They are, but they're a well-known national public accounting firm in the United States. Terry is a manager on the annual financial statement audit engagement for Isaac Eisen Industries Incorporated, or 4i, publicly traded company in the United States located in Kansas City. With respect to the independence requirements of the AICPA Code of Professional Conduct, which of the following situations would most likely impair Terry's independence on the 4i engagement? Okay, so let's go through these each point, okay? Terry's a member of the same country club as several of the executives on the 4i engagement or management team, not the engagement team, the management team. My apologies. Is that okay or not? That is absolutely okay. That's not violated independence. Okay. Country clubs are specific guide or specific area that we talked about that independence is not impaired if there's a shared interest there. 4i still owes a material amount of fees to HJC from an interim review engagement conducted 6 months ago. Is that a violation? It's a liability, but is it a problem? So what is the threshold that we would need to be concerned about? Over a year. Yeah, it has to be long-term because remember, it has to be a long-term payable because in that case, there's implicit interest associated with it, meaning it's an ownership interest. Okay. 6 months is not long enough though. 4i's management team threatened to sue HJC for conducting the prior year's financial statement audit, but has not filed the necessary paperwork to commence litigation. Is that a threat? Yes. It doesn't matter if litigation has commenced, if it's probable that it will commence, or if there's threatened litigation, that is enough to impair independence. So C is our answer. D cannot be the answer because it's all the above. And just like I said, all the above is rarely the answer. Like 25% of the time, it's the answer. Okay, 25% of the time. Terry's primary point of contact for our 4i audit is 4i controller Davis Templeton. What do you think of that name right there? Davis Templeton. Terry believes that Davis may be fraudulently overstated 4i's revenue from recording particular sales. Which of the following audit procedures most likely be used to identify the situation? So a couple of issues that we have to identify here. If we're talking about recording fictitious sales, what is our assertion that we're dealing with here? This is the risk. What is the assertion associated with that risk? EO, yeah, existence occurrence, okay? Existence occurrence. So if we're talking about existence occurrence, are we going to vouch or are we going to trace? We're going to vouch, okay? We're going to vouch. We're moving from top to bottom, okay? Moving top to bottom, move the V pointing down, not tracing. Again, this is assuming that I'm using vouching and tracing correctly, which I always will in the exam. At least I won't intentionally mislead you. I did one time mix up vouching and tracing. That was a dark moment in my history, all right? But I won't do that to you on the exam. I'm trying to check and make sure these are all correct. All right, so we're talking about vouching, but there are two items that are vouching here, and they're both valid vouching tests. So the question is, are we going to start with the sales invoices or are we going to start with the sales journal? So the question then becomes, if we start with the sales journal and go down to the sales invoices, are we actually determining anything? No, why not? Yes, okay, they're both client generated, so they could be falsified, okay? They both could be falsified. What about if we go down to sales invoices and look at the related shipping documents? Is it possible they could generate shipping documents, but that's a much harder task to do because the shipping documents only take place when something has left the warehouse. So even though these are both testing vouching, if we're concerned about fictitious revenues, A would be our more likely answer than B, okay? All right. As part of confirmations to testing over 4i's accounts receivable. So I said confirmation testing, so I must be testing controls, right? Say it. No, I'm not testing controls. So you should think when you read that, say he said confirmations, he means substantive testing, okay? Substantive testing. Terry did not receive responses to either initial or second requests for several 4i's customers. Assuming that Terry used positive confirmations, which of the following would not be an appropriate alternative procedure for Terry to use to gain assurance regarding these customer accounts receivable balances. So we talked about this. For confirmations, it's possible that a customer or a vendor will not respond to you. And if that's the case, you can't just toss the confirmation out. You have to gain evidence through other procedures. What were the procedures that we talked about? B, C, and D are actually the ones that we talked about in the slide. It's actually chapter 10, slide 31. Those are example. But let's pretend that you did not remember that. You did not remember every single word from every single one of the slides I presented to you. And if you're not in that boat, how dare you? All right. But you didn't remember the words in the slides, and you're just curious, okay, how can I make the determination? Let's look at A, examination of controls over accounts receivable. When does controls testing of accounts receivable take place? Before or after substantive procedures? Before, okay? We're in the substantive phase now. We've already tested controls. Remember, controls testing dictates how our substantive procedures work. So we can't go back and use controls for additional support because we've already done that. We've already used that as this determination of what we need from the substantive procedures. So it doesn't make sense to say, let's go back and look at controls. All right, that was in the past. We're now looking forward. So how are we going to look forward? Do B, C, and D. So A is our answer. These are going to be not be an appropriate procedure because it's basically something that's already taken place. As part of her controls testing of her 4I's purchasing process, Terry is evaluating segregation of duties over the functional areas of purchasing. Which of the following describes a weakness in 4I's accounts payable procedures? So segregation of duties. We're going to see this many times. But what are we talking about again? CAR, what does that stand for? Custody of assets, authorization of transactions, and recording of transactions, okay? So we're looking through a separation of those three responsibilities or a combination of those responsibilities, okay? Accounts payable manager, what is accounts payable manager usually responsible for? Usually is recording, okay? Issuing purchase orders would be what? Authorization, okay? So that would be a separation of the responsibilities. Does that sound like a violation of segregation of duties? Sure does. Let's go through the rest though, just for our peace of mind. The accounts payable system compares the receiving report to the vendor invoice. Does that sound like a violation? That sounds like a good control to me. Sounds like a good control. Accounts payable clerk files invoices and supporting documentation after payment. Is that what the accounts payable clerk should do? Absolutely. Accounts payable clerk manually verifies the arithmetic on the vendor invoice. Yep, that's something we should do. We should make sure that the vendor invoice is correct. That's just basically a good control procedure. So all of these are good control procedures. This is a violation of controls. This is a violation of segregation of duties. This one, in all fairness, this is almost identical to a question that was in the homework. So determine whether 4I's accounts payable are complete. So completeness assertion we're dealing with. Terry performs a test to verify all merchandise received is also recorded. Does that make sense? Yes, because remember, completeness is a recording assertion. So if it's we're trying to make sure it's recorded, that's what we're testing completeness. Population of documents for the test consists of all what? So completeness, we're testing source to record. We're moving from bottom to top. Okay, that's what tracing tells us. What is the source document that would make most sense if we're trying to determine that all merchandise received is also recorded? Receiver reports, the evidence that actually tests are receiving, because we're looking at the source documents as our evidence. We get that source document, we're going to go and check and see, did that get put into the system? So C is an answer. Again, don't overthink this too much. You may look at that and say, that's too simple. Dr. Barnes may never make it that easy. Auditing is easy, okay? So if you know everything, auditing is easy, you know? And I don't know everything, so maybe auditing is not that easy. Terry is testing controls of her 4I's payroll process. One of the management assertions she is highly concerned with is existence occurrence. Okay, so what would be concerned with existence occurrence in payroll? If you were an auditor and you're testing payroll, what would you be concerned with? So like fictitious payments, okay? Fictitious, like either payments to people who don't earn the company or people getting overpaid. Those would kind of be the risks that I would be associated with existence occurrence. So let's go moving forward with that. Which of the following represents a possible misstatement related to the management assertion of existence occurrence? So we're going to go through these and you're going to tell me which assertion is relevant here. Employee compensation and payroll deductions are computed incorrectly. What's our assertion violation? That's a VAA violation. It's not existence occurrence, okay? Employee work performed but not recorded. That's completeness, okay? That's completeness violation. Payments made to employees at rates in excess of authorized amounts. It's also VAA. It's also VAA. So we only got one left. Payments made to valid employees who have not worked. So it sounds like overpayments to employees, okay? Which we said was an existence occurrence violation. So D is our answer. Question number 7, 4I CFO Davis Templeton has tried to assure Terry about the adequacy of 4I's controls over payroll by explaining how individuals who are responsible for approving timesheets are not able to input employee hours worked in 4I's payroll system. So approving timesheets, what does that sound like to you guys? It's another word that begins with the letter A that we're really fond of. Authorization, okay? Input employee hours worked in the payroll system, what does that sound like? Recording, hold on to that, okay? Terry has satisfied this control would help us address the risk of misstatement related to existence occurrence. However, she believes that she needs to test this control because she's a good auditor. Which of the following would be an appropriate test of this control? So we've identified the control as what? We said authorization and recording, that's two aspects of something that we're very fond of in this course. Segregation duties. Maybe you guys are not fond of it, but I'm fond of it, and that's enough. All right, that's enough. Segregation of duties. So we need to test segregation of duties. If we check the numerical sequence of timesheets, is that a test of segregation of duties? No, it tests completeness, but it doesn't test the segregation of responsibilities in existence occurrence. Okay. Inspect timesheets for proper approval supervisor. Okay. What do you guys think on that one? That's only one responsibility area. It only tests one responsibility. It tests the authorization, which we already know the authorization is in place. We're trying to determine that some person who's authorizing, not the same person who's recording. So observe and evaluate proper segregation of duties. Proper segregation of duties. What do you guys think? Would testing segregation of duties be an appropriate test of segregation of duties? I'm going to go with yes. Okay. I'm going to go with yes. C is probably our answer. Perform a search for unrecorded liabilities related to accrued payroll obligations. No, that's not going to be it. Another test of completeness. All right. Terry plans on observing 4I's year-end inventory count. Which of the following statements is correct with regard to the inventory count? So let's go through these one by one. Because the inventory count is taking place at year-end, Terry's observation of the inventory count is not considered a test of controls. Is that a correct statement? That is not a correct statement. The majority of what we'll be doing during a test of inventory will be substantive testing. But remember, we talked about this. We can actually perform dual purpose tests, both test of controls and substantive test as part of an inventory count. So it can be test of controls in some regard. Terry should ensure that no inventory movement or production will take place during the count. What do you guys think about that? Is that a valid statement? That is a valid statement. We don't want inventory moving around if we're trying to account it, okay? Imagine that you're trying to do a count of something and people are just constantly taking things like, stop that, okay? That's what you're going to be doing. So no inventory movement if possible. So B is our answer, but let's go through the rest. Since the client is performing the inventory count, Terry does not have a responsibility to evaluate the instructions and procedures for the count. Does she still have responsibility in this area? Yes, she does. She certainly does, okay? Remember, we talked about this in, I think it was chapter 13 homework. We talked about JP Kumar, I think that was the individual's name, and the auditor had no control over the count sheets, and so he kept adding count sheets at willy-nilly at the point like that, and that was a big fraud. Yeah, that's the danger what happens when you don't control the situation. So we do have to make sure to evaluate instructions and procedures for the count. Since the client has performed the inventory count, Terry does not need to perform test counts of her own. Is that an accurate statement? It is not, because we already know that B is the accurate statement. What's wrong with D? What's wrong with D? So what is an inventory count? If we're the auditors and we go in and observe the client perform the inventory count, what are we doing? We're observing, okay? How high reliability is observation? Low. Very low. Observation is a low reliability test, okay? It's very versatile, but it's a very low reliability test. If we want more reliability, what do? We do the count ourselves. We perform test counts. What do we call that type of test? It's re-performance, okay? If we upgrade an observation test from a re-performance test, we get a lot more assurance than we did if we just have the client do it themselves. All right, question number 9. Terry performed several audit tests during her inventory count observation and addressed various management assertions related to inventory. Which of the following tests would best address the completeness assertion? So completeness, again, as a reiteration, what is completeness trying to test? What are we trying to determine? So we're trying to determine whether something was properly recorded. Remember, completeness is a recording assertion. And remember, it's recorded at all. Did it get recorded at all? So compare inventory quantities on record to the observed inventory quantities sheet to floor. What's the assertion here? EO, okay? A is not a correct. Compare observed inventory quantities to inventory quantities on record. What's floor to sheet? What are we testing here? Completeness, this is our answer, okay? But let's keep going. Inquire about goods held on consignment for others or held on a build and hold basis. What are we testing here? Rights and obligations, Observe the condition of inventory items that may be obsolete, slow moving, or carried in excess quantities. What's our assertion here? VA, these are all valid tests for inventory, but they address different assertions. So you do have to be responsible for knowing what the assertion area is, okay? Terry has noted that 4I appears to have implemented segregation of duties over its transactions related to prepaid assets. Good, we got more segregation of duties. Which of the 3 principal incompatible duties would be the least relevant with respect to prepaid assets? Oh, this is kind of a tricky one because I asked you about this specifically in class. So Is it all of the above? Are all three duties equally relevant? That might be an easy one. So he hasn't used all of the above yet. Let's just do all of the above and be good. Is it all of the above? No, it's not. One of these is not like the other, okay? Which one of these is less important than the others with respect to prepaid assets? Custody. Because remember, if you make that prepaid rent payment to your landlord and then say, oh, I'm not going to live in this house anymore. Can I have my rent back? Your landlord's going to laugh at you, okay? Okay. Once the prepaid asset has been paid, you have little control over. You have no custody of that particular item. So custody is not a relevant segregation of duties item. Question number 11. While HJC's audit of 4i's financial statements is thorough and comprehensive, Terry has noted that some of the 4i's accounts are not tested directly. Rather, these accounts are tested as part of other accounts or processes and usually tested indirectly through use of analytical procedures. What category of accounts am I talking about in this question? Income statement accounts. Good. So which of the following accountants are most likely to be tested directly as indirectly as described above? We're looking for which ones in the income statement, which would be interest expense C. Okay. All of the above, all the other ones are balance sheet accounts, which are tested directly. Interest expense is the most likely to be tested indirectly. And for context, that is one of the accounts that we have tested indirectly in this course. Remember, we did it back in chapter 5. We also did it for the chapter 14, 15, 16 homework. We used an analytical procedure to make an estimation of interest expense. So keep that in mind. Other than comparing actual cash balances to budget amounts, Terry's elected not to perform detailed substantive analytical procedures over 4i's cash account. Which of the following is the most likely reason why Terry is not utilizing substantive analytical procedures over 4i's cash accounts? All right, so we talked about this. Analytical procedures can be used to a very limited degree for cash, but we have a hard time doing any kind of relationship testing for analytical procedures for cash. The reason why is basically cash is affected by everything, okay? Every single process area that we talked about, cash has some effect in those areas. So trying to determine a relationship between any one account is generally not going to be effective. Because we say, well, sales go up, cash goes up. So what if we spent a lot of cash and cost of goods sold? Maybe cash goes down. A lot of different strings pulling a lot of different directions. So which one of those explanations is most consistent with that explanation? Or with this answer? Which one of these answers is most consistent with the explanation? There we go. B, because 4i's cash account probably does not have a predictable relationship with other financial statement accounts. Let's just go through the other answers real quick for context. Because the balance of 4i's cash account is probably much higher than its other balance sheet accounts. Is cash usually the highest balance sheet account? No, usually it's a long-term item, long-term item that's higher. Because it's more efficient for Terry to rely on testing controls and substantive test the details of a 4i cash account. Would that be more efficient? That seems basically less efficient if we did that, okay? Because we don't, efficiency is, if we could test control or test them directly, if we could test, if we use analytical procedures, that would be more efficient than if we could not use analytical procedures. Because remember, the whole goal of analytical procedures is to bypass some work. Because there are no analytical procedures that are available for testing cash, that is not true. There are a few, the ones that we talked about have to do with expectations, comparisons to expectations, or changes in previous periods, or to budgets, okay? So those are possibilities that we could actually use for analytical procedures, but that's limited in scope, very limited. All right, I'm going to jump a little bit ahead here. So here's a question I was talking about. And again, there will be a problem on the exam that's nearly identical in format to this. The way that I think you should approach these questions is I think that you should start by looking at the control activities related to the process and identifying two things. First of all, what process area are they specifically relevant to? Or sorry, what is the assertion? And then what process area are they specifically relevant to? And by that, remember in purchasing, we talked about controls over purchases and controls over cash disbursements, okay? So here's what I want to do. For these 6 items, I'd like you to give me the assertion and then tell me whether it relates to purchases or cash disbursements or possibly both, okay? So accounting for the numerical sequence of checks. What is our primary assertion that would be used for this control to be used for? So it could actually be used for both existence, occurrence, and completeness. But if we're talking about purchases, we're probably more concerned about completeness, okay? Because remember, completeness or purchases would represent expenses or liabilities to the organization. So we want to make sure that they're fully recorded. So completeness, all right. And then if we're talking about checks, then it's probably going to be cash disbursements, not purchases themselves, okay? Because the purchases would have to do with the goods themselves. So completeness and cash disbursements. All receiving reports forwarded to the accounts payable department on a daily basis, okay? What's our assertion here? Daily basis is a big clue. Cutoff, yes, we got cutoff. And what is our process area? Are we talking about purchases or cash disbursements? Accounts payable, so purchases, yeah, purchases, okay. Daily cash disbursements report reconciled to checks and electronic payments issued. This should be pretty easy. What are we talking about for the assertion? Reconciliations, pretty big clue. VAA, we're talking about VAA, and you see word cash disbursement, so it's probably going to be related to cash disbursements, okay? Purchase not recorded without approved purchase order and receiving report, okay? So we have something to make sure that we don't actually have transactions that are not proper. So if that's the case, we're probably talking about existence occurrence, okay? So it's turn to place, so it gets recorded because it actually has matching information. And this relates to the purchasing process. Using of a chart of accounts. So chart of accounts, that's making sure that items are in the correct account, which sounds like classification. This can actually be both. Chart of accounts can be both purchasing and cash disbursements. Use of disclosure checklist. So if we're talking about disclosure, these are items that go into the financial statements. They're items that go in the financial statements. We're probably talking about similar to classification, but not quite the same. Presentation, yes, presentation, and this can actually be both as well. So once you've identified the assertions and these process areas, let's go back and look at the controls, okay? So we've got two controls in each area, or sorry, two risks in each area, my apologies, risk in each area. So purchase transactions are recorded in the wrong period. This seems to be a violation of what assertion? Cutoff, and we only had one item that was both cutoff and purchases. That was item number 2, all receiving reports forwarded to the accounts payable department on a daily basis, okay? Purchases recorded, but goods or services are not ordered or received, okay? So something gets recorded, but it doesn't exist. So it's existence occurrence, okay? Again, existence occurrence and purchases, we only had one of those items. That was number 4, purchase not recorded without approving purchase order for receiving report. Moving down to cash disbursements. Cash disbursement charged to the incorrect account. So we're not in the correct account, so that's going to be a violation of the classification. And we only had one that related to classification altogether. That was use of a chart of accounts. And then cash disbursement made but not recorded. So what's our violation of assertion here? Completeness. And our completeness was our number 1, use of numerical sequence of checks, number 1 there. So if you do that procedure for the exam and you feel pretty confident about your approach to this, I think this will be an easy problem for you guys. If you don't utilize this procedure, well, you can approach it however you want. This is just what I found that works for students in the past. All right. What is a substantive strategy? So I'm going to go ahead and pull up the answer key so you can kind of see what my process was behind this, especially since we're running out of time. I want to make sure. By the way, the answer key is available online right now. So substantive strategy is when an auditor is elected not to test controls as part of the audit. Instead, the auditor will obtain all of his remaining assurance from substantive procedures, hence the substantive strategy. When do we use the substantive strategy generally? When it's more efficient to test the transactions than the surrounding controls. The areas we talked about, those were areas with large account balances and large transaction amounts, but infrequent activity. So property, plant, equipment, investment, long-term debt, stockholders' equity, including dividends, okay? Contrast that to a reliance strategy. A reliance strategy means the auditor intends to rely on the entity's controls. The auditor plans to perform tests of controls and uses the test results to determine the achieved level of control risk. This is usually going to take place when there's a lot of transaction activity. So basically that's everything else in the balance sheet, okay? Cash, accounts receivable, accounts payable, inventory. By the way, et cetera would not be a correct answer here, but you guys get what I'm saying here when I say et cetera, okay? All right, last question here, the last question. This is actually what I was talking about earlier. Assume that SOS is elected to pay dividends to its shareholders for the year under audit. How would the How would the audit dividend declared if SOS used an independent dividend dispersing agent? To clarify again, the wording on this is not as important as understanding the assertions that are being tested in this area. So confirm the amount dispersed with the agent. So it's a confirmation over dividends, which means that we're testing primarily completeness, okay? And then agreeing this amount with the amount authorized by the board of directors, that would be a test of valuation allocation accuracy. Those are our two primary assertions. Now, would we use the same procedures if our client was the one who dispersed the dividends, if they didn't include a dividend dispersing agent? I hate saying that because it's so hard to say. The answer is no, we would have different procedures. We would recompute the amount of dividend authorized by the board of directors, so a recomputation, which is a VAA test, and we would trace the amount of the cash disbursement to the dividend payable to make sure something got properly recorded, because we want to make sure it's complete, okay? Yes?
So the only difference is the order of which you test the assertion.
You could put it in either order, it would be fine, okay? The sequence actually doesn't matter, that's just the way it was presented in the book. Okay. All right, and with that, that's the end of the exam. That's the end of the study. Are there any questions about anything in the exam, the study guide that I did not go through? All right, if you have questions between now and Wednesday, please make sure you reach out to me, either email or I'll be in office hours most of the day tomorrow. Best of luck with your studies.